Awesome. Okay, so welcome to the range webinar. Welcome, welcome, welcome. And we are finally on our second webinar since we began the mentorship. The first one was the candles webinar, and then now we have the range webinar, and then next week we'll have the trade setups webinar, seminar webinar, same thing. So let's begin. Oh, actually, let's just reflect one more time. So we had the intro day before that was on the 4th. We had the candle seminar. We had backtesting. We had 2 days of live trading, which was incredible results. If you made it there, you were able to witness. It's also recorded and uploaded, and the link has been shared as well. So if you're in the Telegram, you can find it there. Now we have the range seminar. Tomorrow we have backtesting, and then we'll have live trading again next week, Tuesday and Thursday. I'm expecting again incredible results as well. So no further ado, let's get to it. Here we are. So we need to ask ourselves, what is a range? What is a range? So essentially, a range is just everything that's in between support and resistance. That's a range. Everything that's in between support and resistance is the range. So like, let's say we have a support right here that was formed, and then we have a resistance right here that was formed, and then let's say we have some, I don't know, we got some bearish candles coming down to fill the range, something like that, just to fill the range, right? Retesting the support. And then let's say we got some bullish candles now that's forming, respecting this support here. Then maybe you got like something else just driving up, continuing this sort of reversal at the support all the way back up to the top of the range, right? So this is a range. This is a range. It's exactly support and resistance and everything that's in between. So the uppermost limits of support and resistance and the lowermost limits of support and resistance. Literally, everything in between the sandwich. That's the range. Cool. So now that we know that's the range, why is this important? Because our trading style is based around this range. The idea of a range is sort of the foundation of the trades we want to take. Because let's say we have price in a downtrend, or in an uptrend, right? So let's say we have price in an uptrend, right? And it would look something like the candles before here look something like maybe something like this, right? So the candle before this, that's kind of a small candle. The candle before this bearish red candle right next to it, it looks something like this maybe, right? So clear uptrend. And this is a huge bullish candle. So you got a lot of volume, momentum, right? Clear uptrend. So when we say that price is now closed inside of this range, right? If we're saying that price has closed, this bullish candle came up and it's respecting this resistance. In fact, it's participating in forming this resistance because the next candle closed bearish, right? So you have a bullish candle, you have a bearish candle right after, you have a resistance form. So it formed this resistance. This huge bullish candle to continue the uptrend participated in forming this new range we have here, right? It participated in forming this new range we have here. So when this price came up from this uptrend, formed the resistance here, it pulled back and formed support, creating this range that we're in now, right? Creating this range. So let's say this range, if this range was about, I want to erase nothing crazy. If this range is about, let's say, I don't know, 25, 30, 40 pips, if this range is about 25 to 40 pips, or even bigger, at least 25 pips, then we're interested in trading the range as well. Because normally we're looking for a breakout, but if we got something that's like 25 from the top to the bottom of the range, then we're interested in trading inside of the range. So when we had this candle form bullish, creating this high off of this uptrend, off of this bullish uptrend, we had this candle right here formed and closed, creating this resistance, right? Forming one of the major components of a range. For a range, we need a support and resistance, creating this resistance, right? And then you had price drive back down, closing bearish, but the candle right after that closed bullish to form this support. When we have this next bullish candle that formed, and we know that this range now from the resistance to the support is 25 to 40 pips, we know now that we can potentially enter a trade on the break of this high to drive up and fill the range, continuing the bullish momentum and current uptrend. Does that make sense? Any questions? You see the story that we're painting here with price? Price came up, created a new high, also created this resistance. Price drove back down, but remember, it's an uptrend. Price had a pullback, right? Because we know that market structure goes up, pulls back, goes up in an uptrend, pulls back, goes up, pulls back, right? And goes up to continue the uptrend in a trending uptrend market, right? So what is this? Price went up, pulled back. Formed this support with this new bullish candle. It formed this support. So now we know that on the next bullish candle, after it creates this bottom wick and it breaks this high, we're entering. That's our trade to fill this range.
Okay.
You guys understand that?
Yeah, so all right, I think, can I just say one thing? So basically on the downtrend of the range that's being formed based on the support and resistance that's being formed, once it breaks the high of the next bullish movement.
One second,
That's
let's go back.
Okay,
You said
okay.
on the downtrend, what downtrend? You mean this pullback move right here?
Yeah, no, yeah, pull back, not
Okay.
downtrend. Yeah, so it goes up, it pulls back,
Uh-huh.
then it tries to go up again. Once it breaks the high, once the next candle breaks the high of the next candle that's trying to go up, that's trying to be bullish,
Mm-hmm.
right? That's when you know you can go into a trade right there.
Yeah,
Or
that's when we're interested
you're interested in a trade.
in
Okay, I
entering this
see.
trade. And if it made a wick like this, like you see it has right here, if it made a nice, steep, long wick like this, then instead of our stop loss being at the low of the previous candle where it normally would be, we can have it at the low of its own candle because it made this nice wick, right? and then we'll let it just ride. Momentum and volume should push it up to continue the trend, and that would be a winning trade for us. Now, is this the first time
Pause.
you've seen this?
No, what's the significance of putting the stop loss there? Why you need the stop loss there?
To protect our account. So if it decides that it's not going to push and drive and it comes back against us, we've only risked 1 to 2%. And when we have our stop loss, it's going to determine our lot size. So when we come into this tool for position sizing and we put our account size, let's say you have a, let's say 100K account, right? You're funded. You have a 100K account, you're risking 2%, right? Your risk right here, press OK. Now, if this is our entry here and our stop loss is here, if you look right here, it's saying that we have 9.8 lot size. If you look at quantity for gold, 9.8. But if our stop loss is here, it's saying we have 4.2 lot size, right? It means $42 for each pip, roughly. But if we look here and we say, oh, our stop loss is actually 75 pips. So now we have $26, 2.6 lot size, 22.6 lot size, $26 per pip. So at 75 pips, we're only risking 2.6 lot size, $26 for our 2% risk. So this is risk management. We have to have a stop loss. That's why when we start the trade, right? It goes back to a question you asked the other day. Beautiful questions, great questions. When we start the trade, we have to have our stop loss. But when this trade goes into maybe 10 pips, 15 pips, then we can go risk-free. Now we're risking nothing and it's already driving. It's already driving. It's almost like we were given the opportunity to take this trade without risking anything now. But the reason we can't start it risk-free from the beginning is because sometimes price might do something like this. It might try to go up a bit, right? But before it goes to 10 pips and before risk-free, it might come down just a little bit, but still respecting this low. It might come down a little bit like this and then come back up. But once now we got our 10 pips, then and only then can we say, okay, I'm going to go risk-free now. I'm comfortable going risk-free now. I don't think it's going to come back against me. Or it might even come back against you, but that's okay. You're risk-free. Even if it goes back against you, it's a risk-free trade. You don't lose anything. So it's idea to have before we enter any trade, it's mandatory, not ideal. It's mandatory to have an idea of where your stop loss is going to be, because it's a vital component of the trade. Not just the idea of where we're going to take our profits. Like, man, I'm going to take my profits way up here. I'm going to get it. No, we got to consider also where our stop loss is going to be, because that's how we're going to really know how much we want to risk for that trade. What happened to my candle right here? I must have erased it. That's how we really got to know how much we want to risk for that trade.
Which tool do you click to open the stop loss like feature? Like
The stop loss? Oh, it's
like
right here to the left. It's right here to the left. It's the position sizer.
so long position. Oh, that one.
You got short and long available.
Okay.
Yeah. You got a few things in here. If you go into epicfx.academy, you log into your price action mastery course. There's a entire what do you call it? Tutorial on TradingView. It's very beneficial. I think everyone should check it out when they have a moment. It's very nice. All right. So range. We need to know where the range is vital, because this range is the foundation of our trading style, and it's how we trade the market, right? What was this? Sorry, that was wrong. It's how we trade the market. So we need to know about the range. Any questions before I move forward? Okay, cool. So normally we might have these type of setups available for us, right? But normally we're looking for something outside of the range where we might get a candle that actually closed like this, outside of the range. You know what I mean? It closed outside of the range. So what happens when we close outside of the range? Now what we're looking for, well, this is what I wanted to say earlier too, when I asked you about this trade. I asked, do you know what this is? Do you know what this is? So, let me just show you. So when we look at this, I erased it, but it's essentially this right here. It's a bullish wick fill, right? We have price drive up, pull back, forming a support. We got the support form, and now we got the buys, the buy stop on the break of the high of the previous bullish candle, right? This is exactly what that is. But normally we're looking for breakouts, right? We're looking for breakouts. So when we get a trade outside of the range, then that's a clear setup for us. It's a clear setup for us. So our style is revolving around the range. So when we got a closure outside of the range, similar to this right here, then we're looking for the next candle, form a bottom wick, right? Respecting. It doesn't matter where it go. It can come this next candle can come all the way down here for all at once. It doesn't matter. But as long as it, look, I'll give you an example. As long as it respects this resistance and actually closes or breaks above this candle to the left right here, if it breaks above that, we got an impulse entry. Or as long as it closes above that, maybe up here, but doesn't matter. That was our trade right there. If it goes and forms a steep wick like this, and it's respecting the low of the previous candle, but it forms a steep wick like this, oh, for sure. As soon as it comes back up, when it breaks the previous candle's high, we're in there. We're in it, like tenant. For real. And I'll show you with the position sizer what that look like. Just something like that. But in this case, we wouldn't have this as our stop loss. We'd have to have about 15, 30 pips, something sensible for our stop loss, something like that. But as soon as it breaks the high of this candle right here, we're activated. But can you guys see how this trading style in its entirety is centered around this concept of a range? You guys understand that?
Yeah, so to create the range, it's the first three candles that created the range.
It's the first three candles that created the range?
Is that
What
what
do
you're
you mean?
saying? Like those big bullish, the big bluish bullish candle, then
Yeah, so
then the
this
pullback that created the range, or no?
um yes, that's also true. That's also true. But I guess it's easier if we say that this resistance formed, this bearish candle after this bullish candle formed a resistance, right? And the support form. This bullish candle after this bearish candle formed this support. So it's just safe to
Okay,
say
okay, I see.
when we have a support form and a resistance form, we have a range form. And if it's a nice sizable range, we can actually trade inside of the range. If it's a nice sizable range, 25, 40 pips, we can actually trade inside of the range. Otherwise, we're looking for a breakout outside of the range. We're looking for a breakout. We only focus on these setups right here. These 4 setups, that's all we need. Literally. Let me see if I can zoom in. I don't even have to go down. Scroll down here, right? So we're looking for this breakout. It's a simple breakout. Price closed above the range, right? This is a range. I mean, it's only all we see here is the resistance, but you already understand range, so you can imagine that below this photo is a support, right? But we're waiting for the breakout, which we got on this candle, waiting for the bottom wick to be formed on the next candle, and then on the break of this high, we're in there. We're in there, right? And then here, break and retest. Price closed above the range. Next candle closed bearish, retesting the resistance, which is now a support because this candle closed bearish, respecting the support above this support, right? Which was a resistance, but now it's a support. And the next candle drove up. It was a break and retest. Price broke up, it retested, and then it continued, right? So let's look at this one here. This one. This is pretty much a false breakout. Price broke outside of the range. It broke outside of the range, right? We got this support here, and it closed below, right? And this normally happens against the direction of the trend. So if price is bullish, but you got a candle that closed below the support outside of the range, but the next candle closes back inside of the range like this, it's usually a strong indication of a false breakout. Price closed back into the range, and then you're going to have price fill the range. So we call this false breakout or range fill. Quite oftentimes I just call it a range fill because it can happen in any direction. And when you see it, you can take it. You can take it. And then this is what the example we gave earlier. We got a wick fill. Price creates this high. We got a wick fill. Price creates this high right up here in a trendy market. Then it comes back down to form the support. Next candle is bullish. On a break of this to continue the trend, we enter, right? I need confirmation from everyone that you guys understand this concept, right? You understand this, what I'm saying? Just type in the chat or something, or say something. Does this make sense to everyone? Not sure, maybe.
Yeah, I'm getting it, but it's still a little like it's not registering the same way. Like I'm still getting the bearish after the bullish
Okay.
is a resistance, and the bullish after the bearish is a support, and then
Yeah.
breakouts and things like that. I'm still confused. Like it's still not hitting me yet.
Well, the breakouts are actually the setup. Right now, we're just talking about before the setup. We're talking about the analysis. When we understand where the support and resistance is located, where the range is formed, then we can start creating an analysis. So the breakout, or maybe not a breakout, like I said, we can also trade inside the range, but that portion is about our trade setups and our entries. So that's actually for next week's seminar, but I'm just explaining why the range is important for us to know, right? So now if we look here, we want to plot our support and our resistance, right? So we have a range, so we can identify our range, right? So we
Yeah,
come
this
to
is
the chart, we see that we have this level here, right? We got a resistance here. Why do we have a resistance, right? Tell me, why do we have a resistance right here?
because there's a bearish after that bull candle.
Right? Yeah, and
Yeah,
these wicks are rejecting. You can also see these wicks are rejecting.
yeah,
You
yeah.
can see these wicks are rejecting. So nothing could close above this. Let me zoom in real quick, just briefly, right? Price couldn't close above this candle, right? Price couldn't close above this candle. So it formed this resistance right here, right? So let's plot it. It formed this resistance, and we plot it on the body, on the body. We plot it on the body of the candle, not the wicks, because the wicks are just showing us where price went, but it couldn't close. So this is our resistance right here, right? That's our resistance right there. And then above this resistance, which is also good to note, you can also look for clean traffic. We got clean traffic right here. So if price closed above here, You got this clean traffic to fill to the left side. So we also use the clean traffic to identify range. Now, next to that, right here, where's our support? Is it here? Is it here? This is our support right here. Is it here? No, our support is right here. We got a support formed right here, right? I'm using the wrong tool. 1 second. We got a support formed right here, right? If you look to the left and say, oh, this is a better support right here. Yeah, this is also a nice support. Both of them are nice. If you look to the left, we always look at the left. When we are attempting to create our support and our resistance or form our ranges, we're looking to the left because that's where the data is. Even when we came here, we looked left because the price is here. Price is here. So when we came here, even when we came here to plot our resistance, we looked left, right? Also, we got a key level right here. There's some resistance right here. There's some resistance, so we can plot that one as well. That's fine, right? So now we got a range right here, and we got a range right here. If we look at below at the bottom of this clean traffic, where do we have another range? Please tell me. And actually, we can adjust this because look, there's a little support right here. You can adjust this to here to have a, because we want to just be at the clean traffic. Because if price comes below here, it's clean traffic, right? If price goes up here, look at this, clean traffic, right? If price, let's say, all right, let's look. I'll just show you real quick. On the replay mode, boom, cool. We're in replay mode. So if price comes above here, we got this clean move up, right? If price comes up here, we got this clean move up. This one is a little bit choppy, so I would say above here. But if price, and I don't even know how many pips that is, but let's just look and see. 20 pips. Yeah, it's okay. I wouldn't take it, but we can actually remove this because this is a support and not a resistance if we're looking for the buys. But if price comes up to here, we got this clean traffic with this level. That's it's a key level because it's support here. But we can see that price might fill this range, and if it comes up above here, it'll fill this range as well. And if it comes up above here, it may fill this range as well. You guys understand that? So let's look and see what happened. I mean, it's a downtrend, but if it came up, well, more than likely it's going to fill the range. Okay. We see price came up to here. It already filled that range. Price came up and filled this range as well, right? And sure, we just did the replay, but my point is, look at this, right? Clean traffic. So you had a resistance here, but it's our clean traffic, right? So price could just go up and fill that. Does that make sense to everybody? Any questions? Cool. All right, so let's move forward. So how many ranges do we have here that we plotted? We got 1 here, we got 2 here, we got 3 here. There's 3. And if you plot this one, looking at where the clean traffic is, there's 4. And if price breaks above here, you got another range right here. We got another range right here. That's 5. And if you missed all of that, let's say you missed all of these trades right here. You're like, damn, I just missed all them trades. You didn't really miss anything because guess what? You can wait. It may not be today, maybe the day after, or maybe the week after, but you know that when price comes above here, you got all this clean traffic up here. You got all this clean traffic for price to just fill this range and drive all the way up. Is that making sense?
Oh, yeah, okay, I got you.
Any questions? This is for everybody. I want people to speak up. Nathan, can you hear me? Ade Doyen? Is this making sense to everybody?
Yes, I can hear you. I can hear you.
Awesome, brother. I'm happy you're joining us. I'm happy you're with us. Sweet. So
Yes, it's the time constraint because I calculated the time compared to Nigeria.
oh yeah, no worries, brother. So I mean, in your case and many other people that there's the time difference an issue, definitely recording this for everybody, and hopefully when everyone has time they can go through it again to check it out if they miss anything. So this is
Yeah,
awesome,
yeah,
right?
yeah. I appreciate that.
Our strategy is simple. We got all these ranges and we're going to trade these ranges. Like our style is based on these ranges. But do you see, like, you never have to have FOMO, because if you missed out on something, you didn't really miss out. You didn't really miss out. If you want to say and be stuck in this idea like, oh, I missed out on this trade. Well, what about in 1995 when you weren't trading? You missed out on all those trades in 96, the financial crisis of 97. Big moves. You missed out on all those. That financial crisis made some people billionaires. So if you think like that, when you weren't even trading, you missed out on everything, all these trades. So we don't want to think like that, because there's more opportunities to come. If price close and breaks up above this resistance right here, this range, then we got more buys. You know what I'm saying? It's fine if you didn't miss anything. There's always going to be another opportunity, but we want to identify where the clean traffic is as well, because it's much easier trades for us. If there's clean traffic there, it's better that we plot our support and our resistance where there's clean traffic, and we can just focus on the trades that's going to give us an easy move. If there's volume, it's just like it's like you're greasing up something to, like, let's say you're trying to that's a bad example. Let's say you got a door on a track, and it's like kind of rusty, but you put like some oil or some WD-40, and now it's just sliding. That clean traffic is like that oil. I mean, when you got that volume as well, and you got clean traffic, you got to break outside of a range, or you got clean traffic inside of a range that's large enough to take some trades. That oil is just gonna, that volume is just gonna push the trade into your direction, you know? So we want to focus on where there's the volume. I want to just see where this went actually. And it didn't close above. Look at that rejection. And we had our resistance right here. Look at that rejection. You see that, right? Did everybody see that? Let me replay it one more time, just in case you missed it. So replaying this. We got a resistance right here. Why? Because there's a bearish candle after a bullish candle. And then after that, there's clean traffic, right? So looking at, I'm going to play this on its replay mode, but I'm going to play it. But look where price rejected. It went here, right? The next candle. You see that? It couldn't close above. Let's see the candle after that. It respected that resistance, right? We already had this level plotted here, right? This candle just created a wick. The body of the candle didn't close above. That's why it's important when we draw our support and our resistance, we draw it at the body. The body of the candle couldn't close above. Does that make sense to everybody? Only the wicks went above and created this high, but the body couldn't close above. Cool. So let's look at some other examples here. Let's clear. Let's just go to another chart. Let's go to British pound. All right, this is British pound. Let's look at the 4-hour. Okay. So where's our first resistance here? Or our first support. Okay, I'll just draw it out for everybody. Our first support is right here. If we look, these wicks, body closure, they both respected this level. And then looking to the left, this was also a key level here because price respected this level as well, right? Where's our nearest resistance? I can say right here, right here. But this candle next to it already closed above it, right? I mean, it's a small closure, but it's a closure above nonetheless, right? This is our level on the bodies. This next candle closed above, closed above. This is a valid breakout. It's a small closure, but at your own discretion, if you're comfortable with that, or you want to wait for a bigger breakout, why not? So this is the range right here, right? What about after that? If you look right here, so if price, and we got clean traffic, what do we have, guys? Clean traffic. So if this price close above here, we can potentially drive up and fill this range. And then where's the next one after that? We got a resistance up here. We got a minor key level right before that, right here, where price can react because it did in the past. It was a support. It was a support. But when it broke support right here, right? So price came down, closed bearish, next candle closed bullish, it formed the support. Later, when price came back down, it broke right through it. But when it comes back up, if it comes back up here, it could actually respect it as a resistance and continue back down. So it's a valid level. It's a valid level. Anything in between? Let's see what size, how many pips in between. Decent size in between as well, right? Decent size in between as well. But we wouldn't just trade that, right? We wouldn't just trade that. We would want to wait for price to come up, close below, and we're interested in, if there's volume and momentum, we're interested in trading up to maybe this high, or look to the left, this resistance up here, right? Is that making sense? And you don't have to plot all these ranges. I mean, if we just come on the charts and we see that, if we came onto the charts and we see that price is right here, okay, let's say, well, we're looking for a resistance right up here. Or if you wanted to plot this one right here, fine, why not? If you wanted to plot that one, we got a closer above that. So, and price could drive potentially up to here, right? So let's say if we had an entry here, previous candle is our stop loss. Our take profit is up here. Stop loss 71 pips for potentially 167 pips, right? Risking whatever your percentage is, 1 or 2% based on your account size. When price breaks the high of this candle, we're activated and could continue driving up, because the session we're going to be in as well is going to be volume, right? We're not going to trade outside any session that doesn't have volume. It doesn't make any sense, right? Doesn't make any sense. All right, cool. So the whole point of this right here is just to show you that you don't have to have all these things. Just look where immediate price is, see where you want to enter, where you want to plot your, after your top-down analysis that we've already went over and discussed on how to form, right? Okay, cool. So now let's look somewhere else. Let's just go to a random part in the market. I'm just going to go to some random part in the market. Okay. Let's hit the replay mode. Cool. So we're just at some random spot in the market. Cool. Look at this. So what do we see? Jamar, where's our resistance?
I can't see the numbers, but yeah, it looks like the
Where should I put the mouse? Go down or go up?
go up
Go up.
until you're right. Well,
Right
right
here,
there.
yeah?
Yeah,
Yep. Okay, so we got our resistance right there.
yeah.
Perfect. Beautiful. And where's our nearest next level potential support, our next key level?
I would say maybe if you move your mouse to the left.
To the left?
Yeah, more to the left, down, right there.
Right here,
Or
yes.
above, yeah, in
Exactly.
that area.
Exactly. Right? Exactly.
Yes.
Because no support is formed here yet, right? This one is just still trying to come down, but there's no support formed yet, right? Okay, now we have this range, right? If price closes below here, where might it be able to go next?
If price closes below that, then
Maybe right here, or even below that, maybe here.
Yes.
But you
yeah,
notice this, right? This is now not clean right here. So it's pretty much only clean to about right here. Clean. But if we come here, it's not really that clean. So to about right here is clean. If you're interested in some buys, because the thing is, we said price is going to mirror, right? Remember we said price potentially mirrors the moves, right? So this had a move up and now it's mirroring it down, right? It's like magic. I know. It's like magic. So it's like mirroring it down now, right? So what happens if we get a closure below here? Price was kind of choppy here. So below here, price might be choppy again.
Mm-hmm.
It might be choppy again. So we want to find like, okay, well, where's the clean candles? Maybe below here. That could be a clean move. Even better right here, because clearly you got this clean traffic right here. Clearly you got this clean traffic right here. And you know what? Since we went so far back in replay mode, let's find out, right? Let's find out. Let's take a look. Okay, so it tapped into this whole clean move already. Oh, look at that. Mirroring this move here. Oh, look at that. Okay, so it already fulfilled this clean traffic right here. And it created this support, maybe a news candle this was, because this is in the past, right? This is Thursday, February 2023, right? So there was probably some news. Oh, look, yeah, there was. If we look right here, there was some type of news. So it created this wick, the bottom wick, and maybe to go back up. So let's look moving forward. Okay, it's coming back into the range. So if it comes back into this range, then we know we had this resistance right here. So this is a range. It could fill this range. It's clean traffic. This is quite clean as well. But let's see. So it closed back into this range, and it could potentially just fill this entire range. Because why? It's not the most beautiful candles, but that's still clean traffic, right? That's still clean traffic. So let's see. It rejected. Closed back into the range. So we got clean traffic coming down to about right here and even further down. So it could just drive down potentially. It just depends on the time frame, but you get the idea of the clean traffic, right? Oh, look at that. That was a break and retest. It broke, retested, drove back up. Okay, so let's see. Cool. Now, it came back up to fill that whole move down, right? Now, if price breaks above here, where's our next resistance? Any idea? Jamar, what do we have to do to find our next resistance?
Look to the left.
Right. We have to look to the left. That's what we do. We're people that look to the left. So where is it? Oh, wow. Clean traffic. Damn. Look at that. So if price could break and close above, we got potential drive all the way up to here with a minor key level right here. And sometimes you don't even have to draw a whole new, right? I don't even have to draw these new ones. I can just come down. Price is all the way above here. I can just move this old one up to use up here, right? Got a level right there. Sorry if you can't see it. And then we got another old one. If you don't want to go down, you could just make a new one, no problem. But I'm just saying, we don't need them down there anymore because now price is somewhere else. So we see we got this clean traffic all the way. Look at that. Is that clean or no? Yes or no? So let's see if we get this closure. Oh, what is this? Oh yeah, I moved. So yeah, I just moved this up here. We can get a closure above here. Central clean traffic driving all the way up. Right? So let's see. We got a closure. Damn, it's like magic. Oh my God. Let's just see. I'm gonna speed it up. I just want to see if it actually. Oh shit! I just screwed up. I removed it.
A quick question.
Yeah.
When you get the closure, that's when you pull out your stop loss tool and create your stop loss range. Stop loss.
Your position,
Yeah.
yeah,
Position. Okay.
position tool. 1 second. Let me I screwed up. Okay, let me try to find that again. That was like February. Okay, it was around here somewhere. February. Oh, we got the lows. Okay, cool. Anyway, it's right here. I'll just go back to it. It's right here. I see it. All right, cool. All right, so I just wanted to play it out quicker for us, but I ended up going back to current price. So we look to the left, right? Clean traffic. Our level is like here and then also up here. So does price. So now remember that we already made our levels, right? Let's move forward. Let's see what happens. Boom. Oh, wow. Damn. It's like magic. How did we go to the left and predict this level? Because we looked at past price history. We're using price action. We didn't use a Fibonacci. We didn't use the MACD, the RSI, the indicator. We only use one indicator, EYES, 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 eyes. That's the only indicator we're using, right? And we're drawing our support and resistance based on price. Not on we think it's this level. We're just looking. Did price close? Did the body close above this level or below this level? No, it rejected. It formed a support. It formed a resistance. If it formed a support and a resistance, it formed a range, right? So let's see. And it came back down to mirror that, filling this entire range. Clean traffic again. Clean traffic. Now it's formed a support. Now it's going back up. And it's clean traffic. Except for this level. So above here, right? Like I said, above this level, if we get a closure, we can drive back up again. If we get a closure above this level, we can drive back up again. Reject it. Came back down. Clean traffic here. And it just drove. Once it broke this level right here, it just drove. It drove, right? Okay. I'm just gonna speed it up and see what's going on here. Sure. 10 times. Oh, how do I make it play? Jump to real chart. Forward. Oh, play. Here we go. There we go. Look at that range. Just a range. Oh my God. This is a great example. I pause it. It's still going. Anyway. But look at that range right there. Oh my God, disgusting. Cool. Is that making sense to everybody? Any questions? Cool. All right, let's just do one more. And then we can have a Q&A. And if there's no questions, we wrap it up. Let's do US 30. We already got some levels here, but look, all right, there's already some levels here. Let's just look and see if you can understand why these levels are here. I mean, nah, we got to clean this up because these levels may not have been drawn on the 4 hour. So anyway, new levels, idea, support right here. Why? I mean, look at the wicks, rejections, body closures. We got a level resistance right here, but looking left, we also got a key level right here. Support that acted as a resistance for this candle. It was a support here. Price bounced off, went up, broke all the way through, came up. It acted as a resistance right here. This candle reacted to this level. This candle reacted to this level. It was clean traffic, but it reacted to this level, key level. All right. So looking left, we got a resistance right here. And this is important to understand, right? Because when I, and let me start it over. When I was learning this system, I forgot about this, right? It's not even that I forgot about it. It's just that it wasn't emphasized, right? It wasn't emphasized. So I want to emphasize this now for you guys so you can always remember that, right? Support here. If this is where price is, support is here. Looking left, resistance is here. Looking left, right? Looking left some more, the next level is this key level right here. So don't forget, I mean, I know we see the clean traffic here, we've seen this here, but this is also a key level, right? Price reacted to this level right here. If you look left, it reacted again to this level right here. And then it reacted again right here and here 4 times. So it's a key level, right? So let's say if price breaks above here, this range, where's our next level? Maybe right here. Maybe right here. Right? And when we're doing our, let's just break it down to show you how we adjust, right? For higher time frame analysis. So we come over to the daily. We just want to keep in mind that the daily candles have been trending bearish for quite some time, but we see we got a daily level right here. We got a daily resistance right up here. I would say this level to the left because look, I wanted to put it on this level, right? I wanted to put it on this level, but if you look left, it's a much cleaner right here. So we just adjust it a bit, no problem, right? That's a key level to the left as well. Adjust it, it's no problem. We're gonna trade what's inside of this range. We just want to scout that. So now we're going to come down to our 4-hour time frame. We're going to adjust again. Okay. On the 4-hour, this is a strong 4-hour support here. On a daily, maybe we can, on the 4-hour, maybe we can come up down to here now. We removed our daily from that top down to here on the 4-hour, right? We moved it to down to here. We can adjust. We can adjust, no problem. So now we have this range here. Let's come over to the 1-hour. Looking at the 1-hour. All right. Well, we see that now this daily and 4-hour support is holding strong on the 1-hour as well. We can probably adjust our 1-hour resistance to here. So previously our 4-hour was here. The daily was way up here somewhere, but now we're going to adjust it according to where the 1-hour resistance is, right? And sure, this candle has a level right here as well, right? So now we come over to the 30-minute. We plotted 2 ranges. On a 30-minute, it's still a good area. You can adjust it just a little bit if you want to the candle body. This is already on the candle body for the 30-minute. We saw that on the 1-hour, and then the same for this 1-hour and 4-hour about here. So now we got 2 ranges here. If price wants to drive below this and break below this strong support, we got to look left to see where the next level would be. Okay, we came down to here. It's not clean traffic. It's not clean, but if price was able to drive below there, then we can say maybe right here, and then price, and you can wait. You don't have to take those trades. If price closed below here, it's kind of choppy. It's very choppy. But if price closed below here, this is clean traffic. So you can wait. Even if you want to get a closure below here, right? Looking to the right, if you look to the right, if price gives you a closure below here, you don't have to take these trades because look at these rejections, rejection. And what are those rejections coming from? Look to the left. They're coming from this dirty traffic, right? It's not clean. It's dirty traffic. But if you close below here, you got this clean traffic down here. So you can wait, right? Because again, like I said, if you see price rejected. So a closure below might not be strong enough. There might be volume though. That's what usually allows us to break through these levels of resistance and support is the volume. Sweet. So that wraps up our webinar today for range. Any questions at all? Okay, if there's no questions, then I'll see you guys tomorrow for our back testing live simulation around the same time. And this is recorded, so it'll be uploaded. I'll share a link to it shortly. What else I want to say? that's it. If you have any other questions that come to mind later, just hit me up on Telegram or at the next meeting tomorrow. I'll be able to answer those questions as well. Thanks for joining. I appreciate you guys, and I'll see you guys next time. Cheers.
Okay, thank you.
Yep, you're welcome.
Yo, thanks, bro. Peace, man.
Peace, peace, peace. I don't even know how to end the Zoom meeting. Oh, here we go.